the attractiveness that the yields hold in those lower price point markets, because that's where they're going to get their gains from, which the negative gearing incentives have then been pulled away from them. That whole middle belt is going to be very, very competitive.
I agree.
Sitting at that 450 to 900 range mark. And that's kind of where the nation's affordability of buying sits. And so that's where we're going to start to see property prices grow up in over the next sort of 36 to 48 months, while the top of the market, the top percentile, start to relax because the competition won't exist as much there because there's less desires for investors to really buy there. However, that rental market will most likely skyrocket because that's the expensive asset that is not being supported by investors.
Yep.
And so people do still want to rent those assets, but they're going to be very expensive to rent. So what happens to that market? Those people will come back down to a buying market,
Yep.
and they will geographically move around to find their price point. And again, fuel up the middle belt. And this is the side of the economics which haven't really been considered.